Hey guys, we're going to go over a couple things today. I'd like to go over 10 trading tips and how to get started. So the first one we're going to do is we're going to go over and say what the first one really is knowledge is power. So the first thing with knowledge is power is basically if you need to keep up with latest news on stocks, whether just be looking at news before you just randomly jump in a stock. Maybe some knowledge is also knowing patterns that stocks run, and maybe you can learn how to trade them. But just having some knowledge is better than obviously lack of knowledge if you're just going, because otherwise it does come to being gambling. So I've been working on my knowledge for a long time. I basically just keep looking. Really good book I saw, some about day trading, and basically just said always be looking. So I used to do 5 videos a day. Now I'm down to maybe 5 a week. And what it says is basically you're going to sit there and confirm what you know, or it's going to show you have a flaw. So I'm always looking. So if you find any videos you like, send them to me. I'll decipher them for you, or I'll agree with them and probably watch them, or maybe I've already seen it. So that's what I'm talking about, knowledge power, basically. And sometimes they always don't react good to news. So you definitely still want to make sure that there's some simple things when you're looking at a stock before you trade it. You just don't just jump in. Also, we have a rule basically in our room is basically if it doesn't have a pullback, I'm not going to jump in it. And then I better know where to get out. So for me, it's entry time. If I'm getting in, I need to know that I'm getting out. That's knowledge. Otherwise, you're getting in and you really don't need to get when to get out, and then you have this weird thing. If it goes against you, you're going to stay in a stock a lot longer because you don't know when to get out, and that's basically lack of knowledge. So eventually that's what it is. All right, so the next one is basically simply set aside funds. So what I tell people all the time is you don't have to put your money in when you don't know anything. Sometimes I do tell people to stop trading. I know that's financial advice, but it's basically just saying, hey, you're about to cross something shaky and you don't know, so don't go head in without being a little, apprehensive. So setting aside the funds, I usually do that when I tell people to paper trade or just one share trade. So you may get 3 trades a week and then you can paper trade a little bit more. Paper trading is obviously like monopoly money. You're putting fake money in. A little quick note on that. If you're going to put $1 million in, yes, you're probably going to make 100,000 on a crappy move. And then you're going to put real money in and you're going to lose that money because that day that worked. So do a realistic money. Take paper trading just as realistic. The reason I say paper trading, that allows you to keep setting aside funds as you're learning. So if you're setting aside $1,000, maybe you blew $1,000 because you jumped in, and then that gets you more hesitant, less confidence, and all that other stuff. So setting aside of funds while you're learning is very good, and that's the first 2 things. Knowledge is power. Build your knowledge, and set aside funds while you're building that knowledge. All right, so we're going to go to 3, and I'm going to scroll up on my little list here real quick. Sorry. Set aside time. I remember setting aside time, basically just sitting there going, I did this at 4 a.m. till the whole day. I teach tennis in the afternoon, so it was very advantageous for me for my hours compared to somebody else's hours, so I work after the hours of the market. But for you have to start setting some aside time. And if nothing's trading, I'm actually just learning. I'm watching another video. So if I have 2 hours to trade or 2 hours to paper trade, nothing's going, I'm probably watching a video on the side while I'm waiting these 5 or 6 stocks that I've narrowed it down to sit there. So setting aside time, maybe even 20 minutes. So how can you use 20 minutes valuable? I would look at a chart of a runner yesterday, a chart of a loser yesterday. Set aside that time to say, why was that a winner? Why was that a loser? And then you're going to realize it's just timing. Was I trading on the way up or was I trading on the way down? And if you don't even know that, I remember talking to a 3-year trader, and I was just still fresh, still at a year. And I said, stocks go up and down. And he kind of laughed at me. And I said, no, you don't know that, because if you knew that, why are you trading it on the way down when you're supposed to be trading it on the way up? If you're trying to make profit this way, then why have you let this go so far down? It's not going to rebound. If it rebounds, all you can do is break even. So you should have cut your losses a little quicker, and that comes with the knowledge is power eventually. But setting aside time to say, I'm going to look at some charts, I'm going to watch another video, and just make some notes, charting, where you're seeing if the stock's actually going up or the stock's going down. I'm not going to lie, I'm probably 8 months into it, I freaking didn't even understand that basic. I was like, damn, I was just trading whatever. Every millisecond I was looking at something and making up a trade. Instead of seeing actually if the stock's going up or the stock's going down, very simply right now, it's over the 200, under the 200, or going to the 200. But setting aside time, maybe like even 10 minutes a day. I teach music as well and tennis. I usually give some kids some free time on Saturday. They stay there 3 hours. They're way better than everybody else that just comes out for an hour and complains. So I hit on a ball machine in front of them the other day to them, and they're like, you can just go on forever. It's like, this is probably like a third day to me. And he goes, what's a third day? I said, well, I used to do 8 to 9 hours a day, and this was just 3 hours. This is nothing. So I said, I want you to set some time, and any time is better than no time for piano or guitar. We used to tell people 10 minutes a day. You tell them an hour, they won't do the hour, then they don't do anything. But tell them 10 minutes, it's very simple. They might segue into 15 or 20 minutes. And they might do the hour just to spite you, saying 10 minutes. But if you say the hour, sometimes that's daunting. A little trick I use when I teach people tennis, I do the alphabet. Well, the alphabet doesn't look like 1 through 26, which means like, oh my God, it's forever. It's just another letter, and they don't think about it so much. I do that as a trick, and I'll even say double alphabet. I get 52 practices out of them. Or we only score the ones they make in. That's another good way to make people practice a little bit more, and that's setting aside time. So maybe if it's after dinner, you go there, hey, I'm going to do push-ups and watch a video. Or hey, I'm going to do sit-ups and try to do maybe both things. But again, and just take good notes. I used to not take good notes, not going to lie. Chart it like crap. Basically didn't review, and that's why I started doing these videos. They were actually to help me, and then I realized every time I do this, it helps me as well, just to see what I'm supposed to be seeing all the time. So setting aside time. Here we go. So we're going to say start. I have a camera right in front of me, so sorry about that. Start small. We have a lady in our room. I won't tell her name, but I think I taught her a couple times, and then I check on her one day, and she's like, no, I haven't traded yet. And so I'm going to say, hey, not bad. She's still setting times and she's building her knowledge. So I really can't complain. But she sees all what I see. She charted very well in front of me from our previous lessons. And the biggest thing, as I said, please, I'm going to send you some money. Lose it this week. And she goes, why? I said, because if you're willing to lose $5, you're never going to make 50. If you're not going to lose $10, you're never going to make 50 or 100. You got to start somewhere, and if you have 3 trades a week, please use those, but please paper trade. If you don't trade, whether it's paper trading or this, and don't be the long holder trying to make all $1 million in one thing. That's why I said realistically put paper trade funds maybe as 1,000. Something realistically you're going to put in, but start small. And starting small is paper trading with 1,000 realistic money, or paper trade with, or real trade with 1,000, but just say, hey, I'm only going to do 1 share. Bryce Tui, killer. I had a problem a long time ago, I think in March last year, and I just started out really hard, and I lost 800. Well, I was going in big, and I didn't have the knowledge, so I didn't even listen to this. But the whole thing is, after a while, I watched for 10 days and saw things I wouldn't see because I was nervously actually in the trade. So it was really good to sit back, and maybe I could have just set my sides of fun for 10 days. I did not do that. I still worked my job, and I put those 10 days of money in my little account so I can start making. Okay? So start small. I would advise 1 or 10 shares all the time. It's not going to cost you a lot of money, and then you're going to learn because you've pulled the trigger. I do believe in you got to practice. My wife, every once in a while when I teach somebody piano, she goes, I didn't hear anything for 30 minutes. So it's like they're not ready. I'm just clapping the rhythm. And then we're going to touch the piano, and then we're actually going to touch the right key. And she goes, well, sometimes you got to play to screw up. And yes, I do see it sometimes, but I still like my little simple methods. All right, so we're going to go on to the next one. So start small, okay? And then right here, number 5, avoid penny stocks. I hope I'm typing this right. And penny stocks, basically, they're always going delisted. They're refreshing their things, quick, explosive, but they're also quick down if you don't know how to play them correctly. So I would avoid them. Anything under $5, I do gravitate toward a higher price stock, 5 to 20, because I think the percentages or the money range you can make on those are a lot better. But if a stock is anywhere under 5 and I know how to play it, I'll play it. But really, I see penny stock, I just don't do them. I used to do them. You have to do so many shares, and if you really guess wrong on the shares, 50,000 and it drops 20 cents, you think nothing of it. That's $100 or $1,000 down like that, because you're scaling up so much to make up for the penny stock. It's a good way to learn, but still, they're also speculative, even with good news. Like, why the hell are they a penny stock and not a bigger stock? So I would avoid penny stocks. Okay, so number 6, we're going to go time those trades. And so what you're going to do is you're going to find some people know where the volatility hours are. So I personally trade 1 hour before the open, 1 hour after the open, and we let a little more shake up out at the open. The people with bigger money, obviously they can drive the market, so they can drive it up or they can drive it down. So they're going to force some of that time. And with my little money as a retail trader, you're not going to get all that. You're going to sit there and time them. So the best thing you do is let it shake out 5 to 15 minutes. You'll see the overall trend going up or down. That's also like a Tim Bowen. He's a very good teacher. Week open, red to green. So it's week open, meaning red, the candles, and then green, which is the stock. My stocks are always blue. I just can't stand green, so I usually blue. And week open, red to green. And he goes, Tesla opens that every day. And most stocks do, because there's a lot of people saying, well, if it built up after hours and pre-market, because a lot of pre-market traders are buying up the shares, well, I can make profit because I made a lot of profit while I was sleeping because I had a better stock. All right, so timing those trades. Also, maybe, hey, after hours, pre-market. Pre-market's a little shaky. I love pre-market. I'm all in pre-market. I like the little bit of slowness that pre-market provides. I like the after hours that market provides, because it's basically a fresh running stock. And fresh running stocks are very easy. They have a lot more momentum. And then once they slow down, they're going to take a longer time to make a decision if they're worth more. So I actually do like the fresher stocks. So after hours, there's always a runner. And then pre-market, there's 2 or 3 runners all the day. And if they're going down, great. I love stocks going down, because if they're not going down, they're going to be going up soon. And I know how to trade that, so I do that very well. But time those trades, because basically if you do lose, you timed it wrong. I always say it comes down to timing. So we're going to go to the next one, time those trades. And those middle hours of the day are very less volatile. So you're really kind of just getting up and down of the retail trader, you against Bob. And there's not enough volume to drive it up or drive it down in either way. So you're really just, if you bought the top, you're going to wiggle down, get out. Somebody else bought the bottom, they wiggled up. So part of that is just not trading during the less volatile hours. That's for me. All right. So cut those losses with limit orders. Limit order, basically what it is over here. It's an exact price you want to get in. So if you see what you need to see and you see a price, you're going to set basically a profit, hopefully. I do this bracket order right over here all the time. And basically what I'm doing is I'm going to say I'm going to enter the trade. Let me see if I can get somewhere I can draw something. I can enter the trade here, and I'm going to exit here. So that's basically a 1:2 up. I'll put that little mark. So if I enter the stock here at this price, I'm looking to take profit here, or if I hold a little longer, I'm going to take profit there, but my stop loss is somewhere nearby. I usually pick the nearest low. So if the stock was doing this, and it came down and made a near low, and then I thought it was going to break here, let's say I put my stop loss and it doesn't go right, and it comes back down, then it goes. Well, I would have been fine because my stop loss was here from this trade, the nearest low, and then this didn't go as low. And then it finally did break out a little bit more at a price and go hit my targets. And those are limit orders that I've already put my sell when I put my buy. Now, some people ask me, how do I do that in pre-market or after hours? I'm not going to lie. As soon as I have bought it, I immediately clicked and sold it. So right here, right after I bought it, right here, I have now put another order up there. So now the stock's creeping up, maybe teasing me, and then it hits my order and I'm out. Or, hey, it looks very strong. I might raise it up. Now let's just say, hey, this stock's going the other way. It's not really making the move I presumed it was going to make. So as it's going up, it didn't hit my target, and now it's coming down. Two things. Do I break even? Do I hold my plan and just say, here's the stop loss? I will not lie. If it's already done this move and went up, I will slide it to the next nearest low. Because if it's really a botched up plan, it will hit this. Now, I'm not crying about that because that's just, I didn't trade it right. Because the worst thing it can do is keep doing this. And all you had to look at was, if it broke this, like we said, then it's the other trend. So why sit there and hold it? You go, ooh, I want to save my $200 here. And then now it's at negative 1,000. When all you had to do was just take a negative 200 loss. You'll regret it later, and just this little 200, no big deal. Because let's say it starts retrending back up. And you think that's, again, the area. Just get in again and go up. And if you're under PDT, too bad, so sad, just get out of the trade. I've seen people do this. They lose 1,000 just so they can trade the next day and do it all over again. Not the brightest for me. Not too happy with those people because I'd rather lose a trade because you only get 3 a week. All right, so number 8 is be realistic about profits. Be realistic about profits. So some people are always going, hey, I'm trying to make 10%, I'm trying to make 20%. I personally don't care about profit. I'm looking at personally, and I am over PDT, so that does help. But the whole thing is eventually I'm looking at, I want a target to be hit. So if I got in here, I'm looking at here and I don't care about the price. If it goes up to here, good. I still got this, locked it in, I'm good. If it goes here, good. I probably will take another trade here when it proved itself again and take it up to here. But I'm going to take it in 2 sections because I've seen plenty of trades do this. And then come right back and test it. I would have broken even, or maybe the buyers weren't buying anymore. When I could have just taken profit here, and then if it proves itself over this nearest area, I'm in again. So I do take my sections in 2 trades. I don't care. It works for me. Whatever works for you works for you. If I can get a hot dime all the time, I'm good. A hot quarter is good too. And it's kind of funny. People say, hey, did you make, I said, hey, the stock went up $2. Oh my God, how much did you get? Oh, I got this 1 quarter move. Oh, what did that get you? I said, oh, that got me $1,200. You ever seen 5,000 quarters? Oh, okay. So size with small moves, that's how kind of I trade all the time. So be realistic. You're not going to make millions the first day. And the people that are trying to make millions, they've actually, let me grab this. They have said screw knowledge. They're not setting aside funds. They're actually playing with them. And they're not starting out small. They're probably playing penny stocks to make the bigger gain. They don't know how to time the trades, but because they didn't do the knowledge, they just got in. They don't know when to cut losses because they always have hopium, which is hoping it goes to turn back around. And they're not being realistic about profits, which obviously cascaded from the other 8 rules above it. So be realistic. If you can't make a dime, you're not going to make $1. So if you don't know how to get the simple trades down, don't do them. So be very realistic. Otherwise, you're going to be doing that, and risk management. So risk management is, I'm going to cut the loss here. I'm not going to let it just keep going down because I need to hold a trade. Just paper trade more. Take the loss here and paper trade more. We had one of my best friends, Diego. He traded paper trade. I saw some crazy shares. I'm like, that guy's on crack. He had big shares, and the biggest thing after a while, he actually live traded with that, but he also paper traded that. So he was building his mindset for that thing, whether it's real money or not money, because it's still his mindset. Whether it's a real trade or not a real trade, you still have to act like it's trading. So paper trading is not writing it on a piece of paper. I think that's what other people used to do. Paper trading is actually clicking and clicking just like we click. And you just didn't put any money in, so you can't get any money out. But God, you can learn the exact same thing for free. But definitely take those 3 trades. Just do lower shares if you have to. Click. If you don't play the game, you can't make the mistakes, then you'll never know how to not make the mistakes. But if you're just sitting here watching, riding, you're always going to be a winner. You put in fake money of $1 million, you're not going to put a real million in. When you get your money, you're making mistakes. So number 9, reflect on investment behavior. So a lot of people is very, very crucial, and it helps them identify past mistakes. It helps them say, hey, these were winners. Also, the market is ever changing. So lately, we've had less low float, meaning low available share stock run. We've had larger ones that are 100 million shares. Like, why is this running and the 2 million shares not running? Because of supply and demand. But the other one had better news and it had a breakout point. And so when in the morning, if I see one good low float, good. But if I see a larger stock making its highs and it's basing here and it's banging on that door, well, today's volume or volatility will obviously force it to go up. So look at that. And then, here we go. Number 10, stick to the plan. I hear this all the time. A lot of trading platforms and people don't tell the stick to the plan. So I'm going to show you what that stick to the plan means real quick. If I'm over here, let me move all these letters over here real quick. Stick to a plan. So if I'm over here trading this, and whatever happens here, and I say I'm getting in here, or I'm getting in here, or I'm getting in this zone right here. Okay, and I'm saying, hey, I'm going to get out somewhere in this zone. Okay, so let's go. So here's the trade. Starts going up. Probably in somewhere in here. Okay, now I broke that, so that looks good. Holy crap, it's coming back down. I think I'm going to break even. And maybe if you just stuck it out, boom, it was in your little zone and you took profit. Because you stuck to the plan. I have gotten out some of these, or I take a lot of small ones, but now I'm not in the driver's seat. Let me tell you what a driver's seat is to me. I'm not in it all the time, because I have gotten in here, probably gotten out that profit, but the whole thing is, if I would have just stayed there, I would have had one trade take all that instead of 4 mini trades. So I'm learning that. That's one of my crucial things. Otherwise, I don't mind this profit. I could retire just on that move every day, just making the same amount of money that I want to make every day off of some stock that has momentum on news or whatever it may be. Somebody's stockpiling the stock if it's going up, and somebody's dumping it, and all I'm trying to do is ride their coattails. So if I get out here, fine. I bought enough shares that you don't really care about, and if it turns around, fine. But if it turns again, I'll get it. And then I'm just getting used to holding it longer to go all the way to that on one, so I get the same trade all the way up. Cost me only one trade. This maybe cost me 4 trades. Now I have the money to do it now because I've gotten over PDT. If you don't like these rules of taking small money and you're complaining, go back to rule number 2. Set aside funds. As you're not trading and you're building your knowledge and you're setting your time, start small. Avoid the garbage stocks. Figure out how to time those trades. Cut those losses when you're paper trading. Be realistic about small gains, because if you can't get the small gains, this big one's never coming. Eventually you'll see the maneuvers and you go, oh, that makes sense. But the whole thing is sticking to the plan if that's what was your plan. Hold it out. Sometimes I do this now. I click this and I walk out of the room. And the stock may be doing this, and it might be going down. And here's my stop loss. But once it's already made this move out of retesting the same area, I would have now to lock in profits, like Caleb's a good trader. He locks in profits by sliding this up. I used to slide it too soon because it would come re-wick me right here, and I'm out of the trade for nothing, broke even. But if you can wait for this second maneuver to happen, and then you slide it up, you're probably pretty safe. But I'm usually determining which one's really going to go, because there's other things happening where maybe it was testing those highs all over on the way up before it got to that point. So sticking to the plan, because if you don't stick to a plan, you don't know what to do. Because next time it goes down, you go, okay, well, I lost. But now you can look at it and go, oh, what did I reflect on my investment behavior? Well, I used to get out break even. I used to get out too early here, but now that I'm letting the stock form up, I can get more profit. I have a trader in the room, Nate, killer trader. He holds a lot longer and he does get more profit. You go, why didn't you just hold that? And I go, I do this very well. And I said, and you do that very well. I'm comfortable with what I do. I'm comfortable with you do. I always say, nice job, because everybody has their traits that are very, very good. So let me go over a couple more things real quick if you want. How to start day trading. So I'm actually going to cut the video here and I'll shoot another one on how to start day trading, okay? But look, again, here is all your dating tips. Knowledge is power. If you don't know anything, don't get in. Set aside funds. Put some money away. Because if you want to trade, while you're paper trading, you can set more funds away and maybe not have this PDT. But definitely, set aside time to learn. Just watch a stock, and you'd probably see a lot of stuff. Those 10 days I didn't trade after that negative 800 day, very compelling. Things I would have never, ever seen unless that situation happened. So when I didn't earn, I did choose to learn. Obviously with the loss. But I did that. Start small. Went back, started small trades. If I'm off, I go back to that. We had another guy in our room, very good trader. Lost some of his confidence. He said he was on some medicine and it actually made him just watch the loss go down. And he almost blew up his account. And then he came back and I said, wait, where you been? I called him. He goes, I said, you're a good trader. He's like, I was jealous of you. And he didn't believe that. And I said, I can tell you the days I was jealous. I told him exactly the shares and stocks he took from 3 months ago. And then just everybody has their bad days. And bad days, sometimes you got to go back and reread this. Or reread something that got you to where you are today and tracking. Time those trades. Obviously, you want to trade them on the pullbacks, but sometimes you don't want to actually trade the pullback. Some people trade the VWAP bounce. I look at it, but if it can go right through the VWAP just as well, depending on what it looks like, okay? Cutting losses, that's actually the nearest stop loss with a little extra. Be realistic about profits. Don't go for the big shebang right off the bat. Still use those first couple right there. And then if you start seeing different behavior on stocks, maybe it's just a different time in the market. And then just stick to your plan. If you're planning this trade, take it, because at least you have something to refer back to see if it did what you wanted it to do or didn't do. And maybe you just imagine a trade and it was just going up, down, up, down. And maybe if you look back at it, you go, wow, it really did just go up, down. So why didn't I trade it from here to here? And then when it came back down here, I should have traded back up. When it came back down here, I should have traded up. And that's how you make money on a choppy stock. You make sure you're finding buys in the low area and sells in this higher area. Hey, y'all have a great day. Hope that helped out. Thank you.